Yo, what up traders? Welcome back to a new video. Today we're going to be breaking down how I made $25,000 in June. It's going to be jam-packed with information on how to trade my model effectively. It's going to be the time frame alignment model. I will explain how to enter after you miss the entry. So it's going to be a confirmation sequence. And I will also teach you how to be very accurate in determining where the high or the low of the week forms, which is amazing information to have when you're trading during the week. All right, let's dive into these charts. But first, I want to do a little checklist for you guys. If you're not familiar with the time frame alignment model, we'll do a little checklist up here. We'll start off, as always, with the higher time frame bias, right? This is the most important part. If you do not have a clear daily bias, you will not be able to trade the time frame alignment model. Then second step, we need to know what kind of market cycle are we in on the higher time frame as well, because we might be bullish on the higher time frame, right? But there could also be a consolidation phase in between, and that's not high probability to trade. Third off, we want to have a clear market maker model to trade with, because we want to know if we're actually on sell side of the curve or buy side of the curve. This is important because we'll use the other side of the curve to frame new PD arrays for buy side of the curve. That's very important, so note that down. The next step is going to be looking for order pairing sequences. I will show how to draw out the correct range, and we need a smaller range within that range we're trading, because that's actually where the order pairing happens, and this is where we find those turtle soup entries. Now I'm also going to explain a confirmation sequence, which is if you miss the initial entry from the time frame alignment model, you will be able to catch a continuation sequence, which is a little bit safer as well. Because you're waiting for the low or high of the day to get formed. And last off, I will explain how to find the high or low of the week with high accuracy. And this is going to be an eye-opener for some of you. So stick around all the way to the end. And let's just dive into these charts, right? Because we have to start off with the higher time frame, which is on the daily and the weekly. So if we look at the higher time frame for USD CAD, and you might be wondering, wait, you always trade Euro USD or GBP USD, but we had an amazing relative strength indicator for the Canadian dollar to be weak, which is why I paired it up with a strong dollar. And you can see on these weekly candles, that's where you want to position yourself. You want to be in that expansion phase, right? So if we start on the higher time frame here, we can see this bearish fair value gap here, which is being disrespected, right? And you can see it just keeps trading higher. We form one down close candle and start to close above. Very strong indication we're in an expansion phase on the weekly time frame, and the daily is most likely going to deliver higher as well, right? So I want to focus on where do we want to trade, right? We want to trade in an expansion phase. So if we look at this piece of price action over here, we see a down close candle form on Thursday the 28th. Then we have this closure here, right, on the Friday 29th. So for me, if you see this, right, let me just get the replay button here. This is a very nice signature for higher prices, right? Especially because price went back into this redelivered rebalance area, right? It's not an FEG, but it's a balanced price range, and price tags it and then closes back within this candle here. So the next weekly candle is very likely just to keep expanding higher straight up from Monday, right? Because we already have that point here. We have that swing point here. So you can see that over here, Monday trades higher. I think I actually waited for Monday to trade higher. Let me just quickly grab a screenshot, because we don't do hindsight, right? We always trade, and I let my guys know in the group that what I want to take. Right, so here's the screenshot. I'll just outline that. We have that big push as expected, right? This is USD CAD on the 1 hour time frame. We'll go to the 1 hour time frame in a second, and that's after Monday's close, right? So we have this Tuesday candle where we want to focus for higher. Let's switch over to the 4 hour. Okay, so here we have the 4 hour time frame, right? We can actually see this low got run, right? That's on the daily time frame, and this is Monday's candle here developing and closing within. So we have a clear indication we want to trade higher. Time frame alignment model, guys, we want to have a 4 hour fair value gap, and we look for the 1 hour lows to get order paired for higher, right? So we initially start looking for our range here. You want to take a swing low to swing high, right? We can see one here, but does it actually make sense that this low is going to get taken out, right? That's why sometimes you pick the wrong range, because if we pick this range here, it never hits discount, right? That's a problem, because you have to identify if we're in an expansion phase and the retracement phase is coming, where's an actual area where price is most likely not going to go, which is this fair value gap here already got filled up, right? So what you want to do is actually put your Fibonacci here. So now this is the correct range on the 4 hour, because we're still using a swing low to a swing high, right? And then we pick the POI. The POI is a 4 hour fair value gap, right? And we want to look for higher, so we look for 1 hour lows. So if we switch to the 1 hour time frame, so here we are on the 1 hour time frame, right? You can now actually, it's becoming a little bit more clear, right? We have that higher time frame bias, we have that 4 hour range with the key level, and now it becomes a little bit more obvious what we want to do, right? But because when the day starts off, let me just put a line here. This is New York midnight opening, right? The true open for the algorithm, and we put a line here. So now we know, okay, we want to see low of the day below opening price, right? That's ideal, and in discount. So if we look at this range here currently, this looks a lot cleaner than what we saw on the 4 hour. We have a nice set of down close candles here. We have a expansion phase. We have displacement, which forms a fair value gap. And now we just need some 1 hour lows to order pair, right? So we can actually see these lows down here. And that's literally what you want to do. That's time frame alignment model in a nutshell. You want to buy below old lows into a key level. And that's what makes it high probability. And now if we actually pull back the screenshot, right now you can actually see what I marked up here. So if we look at to the left here, right, this is the range over here. Let me zoom in a little bit more. We can see it over here. This is what I want to look for. That's the 4 hour level, right? Looking for the 4 hour to 1 hour sequence. It's literally a sequence. It's no debate what you want to do, right? So there's a very clear model, and that's literally what happened here. It went into the key level and then it went higher. And obviously that is a great start of the week with a nice winner. And if I pull the other screenshot over here, right, I'll let everybody know. We'll hold this overnight, right? Because price didn't really move that much after New York, but it hit the key level. You're using a stop loss based on the 1 hour range here. So there's no need to go break even. You just let price play out, right? And then eventually you can see what kind of push happened. And typically I secure it to maximum 3R, and look at this run, right? You enter literally on the lowest point of this day, and look where price goes all the way higher. And this is just, I could have even, if you were a swing trader and you hold this, look at that, right? Look at that. That's amazing. Like this is, if you would swing trade it, that would be like over 400 pips. Obviously, I'm not a swing trader, so I'm not doing that. I'm just doing a static risk to reward, which is in how my model works, right? You want to favor the math working out. That's how you should trade. All right, now let's break down a confirmation sequence entry, which is if you missed the initial entry on the time frame alignment model due to no stops being run with SMT, that could happen as well. Like the other asset, like DXY runs the order pairing lows, but USD CAD does not, for example. Then you can't enter below the lows, but you know the relative strength is in favor of USD CAD. It's actually in the same week I took this trade. So we bought literally the low here, right, on the Tuesday, and now we're going to break down Friday. And if you zoom in here a little bit, you can already see we have displacement on the daily time frame, which gives us a high probability key level to trade with, right? So I'm marking up this daily fair value gap, and if this was a 1 hour time frame, you guys would literally enter on these types of fair value gaps, right? And the daily is no different than an hourly. It's just the difference in how long the candle takes to develop, right? So we have a high probability key level here. So let's go to the 4 hour, and we look at the 4 hour over here. You can see the daily fair value gap got tagged here. We see a run on stops, right? There's a big 4 hour fair value gap here as well. And let's quickly go to the 1 hour, right? And now it becomes a little bit more clear. Daily fair value gap still over here, right? Let's put down a midnight opening price, right? We want to always, ideally, we want to be a buyer below midnight opening when you're trading a daily profile. And you can see that's the case here as well, right? This is midnight opening. Price runs lower, takes out stops. And typically with the time frame alignment model, you would buy below, right? As there was a 4 hour fair value gap and a 1 hour low, you could buy below. Now, let's say you missed it or you weren't confident in looking for another long. For example, I did it on this day because it was Friday and the entire weekly candle was already expanding bullish a lot, right? So I would rather have a confirmation entry based on candle closure. And this is how you do that. You want to have your daily profile set for low of the day when we're trading below daily opening price. That's important. We really want to see a low get run as well. Ideally, we do have SMT here. You wait for a CSD OB to get created, right? And we can see this down close candle here is the last candle that took out the low over here, right? This is important because now we have a valid order block and we can use this order block as a confirmation that we're gonna go higher, right? And as always, let me just quickly grab a screenshot. There we go, right? We have that fair value gap and the CSD OB, which is this one over here. And you can see price is just running out higher. Don't forget to pay yourself. As I always let everybody know, it's also important to pay yourself, because if you're not securing, it can go back to break even and then you don't have anything. And that's not what we want to do. We want to have a fixed system on taking profits, and that's how you do that. All right, so let's dive into how to predict the low or high of the week. This is so interesting because if you can determine the low of the week, you know you should only be looking for buys afterwards. And it's just becomes so much easier to find correct ranges and where to buy and where to take profits as well, because we're only looking for those buy side liquidity targets. Okay, let's dive into this. All right, let's start off with a screenshot as always from the Discord, because I don't do hindsight education, right? Everything I teach you guys here, I also give my guys in the group before the fact, right? So you know we're actually trading something and not just explaining after the fact. And everybody can do that, you know. There's a lot of educators who do that. I don't do that. So here, right, new week, new chances. Let's wait for USD to trade towards this 4-hour IFVG, right? And I even tell them here, don't get induced. It looks like it's creating the low, right? DXY, I think DXY took out this low as well and went back to discount, but USD did not go to the area I wanted it to go. So let's break down how you can actually determine the low of the week. And you can use the same concept, of course, for high of the week, depending on what you are trading. And we're in the week of 8th of June, right? So this is this piece of price action over here. And important to know, if I zoom in a little bit, Monday starts off over here, right? We have a little small candle, no real induce or displacement for higher. And then we have Tuesday's candle, and we can see what is happening over here. It took out both sides of Monday's candle, and we didn't really move lower on the weekly time frame. This is important, and we have this over here as well. This is a balanced piece of price action, right? This is a redelivered, rebalanced piece of price action, because already painted up and painted down. Now, interesting if we go to the 4-hour now. Now here's the 4-hour. This is that piece of price action I was just talking about earlier. We use IFVGs, and this is like pip perfect where it touched in this area, right? This is the low of the week, and you can see it is a huge rejection candle. Even though we already ran the lows here, right? You would also think, okay, we just run a low, we went into discount of the range, so that should be low of the week, right? What you want to do with the daily candle closure, if it's not favorable, we want to see a deeper retracement. And where do we want to retrace? Often people look for fair value gaps, right? Like to fill up the entire fair value gap here. That could be the case in some scenarios, but what price always wants to do is balance unbalanced pieces of price action, right? So it goes from old highs to old lows, but it also seeks imbalances. But what you got to understand is that price also seeks unbalanced pieces of price action, which are these IFVGs, and it is imbalanced because you got to view it like a paint roller, right? So I use this analogy a lot in my group as well. You want to see price paint upwards through a fair value gap. Now it's being priced back into, but it closed above. So it is not valid anymore for shorts, but it's only balanced when the paint roller comes back down into it, right? Now it's a balanced range, and now price can have a very strong reaction from that area. So it's paint roller up through the fair value gap, and then back paint roller back down into the fair value gap, balancing that piece of price action over here. And then you just gotta wait, because it can also just trade straight through it, right? That's why you wait for confirmation on low or high of the week. You could technically enter, but you need to put your stop on a range low then, right? It's a little bit of a wider stop. If you wait for a 1-hour structure, which we'll dive in right now, then you can trade the structure that comes afterwards. And like I said earlier, it becomes a lot easier to pick your ranges this way. Right, so first off, let's start with a screenshot. As always, this is important because we need to correlate assets, right? We have DXY, our dollar index, and USD-CAD obviously has dollar in it. And you want to use SMT if possible when you're trading a reversal. So over here, we've got that potentially SMT forming on EU and GU as I outlined in the group earlier that week. And it's applicable to USD-CAD as well. So once we see a CSD-OB, that's the confirmation sequence, right, which I talked about earlier, we want to see the same thing with DXY going back into sync because manipulation happens with SMT and distribution, you want to have both assets in sync. That makes it a lot higher probability, right? So that's important to know here. And we waited for SMT or that CSD-OB to form on DXY as well, right? Now here's that 4-hour IFG, right, where I tagged into. Let's just patiently wait for an IFG to be confirmed by a CSD-OB, which is this one here, right? Because this is the one that run the liquidity over here and then tagged into the IFG. You can see once we close above this block over here becomes the CSD-OB, and that's literally where you want to be buying, right? That's a confirmation sequence. Really try to focus on waiting patiently for that confirmation because you will avoid a lot of losses this way. And we just put this screenshot here as well, right? Just for proof, right? We have that CSD-OB formed, is just too clean. And then we have the SMT over there and it tagged the first buy side and we can just see what the result is afterwards, right? It's just one big push up here. And that is how, these are one of my most notable trades during June to get all those payouts. Next week, I'm going to be doing relative strength analysis because now we did USD-CAD and regularly we do Euro-USD or GBP-USD. And I'm going to teach you guys how to select the right asset to trade. And this is going to help all those people who complain Forex is bad. And I say it's just a skill issue because you don't really know what you're doing. But if you pick the right assets, you guys will be able to do the exact same thing I am doing. So next week, we'll focus on that. Thank you so much for sticking to the end of the video. Make sure to like and subscribe the video as always. We're going to post a one-on-one mentorship series soon as well. You don't want to miss that. So make sure to subscribe and I will catch you next week in another video.